Welcome everyone to this session of our May 2026 Microcap Conference. I'm Alex Hanman and I serve as an equity research analyst here at Sidoti & Company. Today, we're pleased to be in conversation with President and COO Joe Hazelton of Dyadic Applied BioSolutions, ticker DYAI. During the presentation, please feel welcome to submit questions using the Zoom Q&A interface at the bottom of your screen. After the presentation, we'll open to your questions. And with that, Joe, I'll turn it over to you.
Essentially, we're focused on three core areas, and we're using our proprietary gene expression technology to express scalable animal-free proteins across three distinct segments: life sciences, food nutrition, and bioindustrial. And additionally, what's making us unique in the market right now is we're not doing this, we're not selling just one product. We're doing multiple products across multiple markets using the same scalable platform. So that enables us to rapidly commercialize products. And as you've seen throughout this year, we've already commercialized 6 products this year, and we're going to continue to push that forward. Obviously, refer to our risk factors in our SEC filings. And let's talk a little bit more about Dyadic. So, as you know, we do operate a lean structure. We're definitely commercially transitioned, but we operate a disciplined structure, and we're not like in 2025 and 2026, we begin to see the early stages of that transition. We've got product launches, we have distribution expansion, we have partner-driven revenues through our partnership with Proliant, which I'll talk about a little bit later. But importantly, we're maintaining a strong balance sheet as we move forward. But we have commercial traction, a diversified revenue model based on product sales, partnership sales, licensing, and profit-sharing agreements. And we're going to continue to focus on capital deployment that supports commercialization. So really, why Dyadic and why now? It's because of the transition. So previously, Dyadic has been focused on trying to license the technology. And anytime you're using a licensing model, the revenues are kind of hit and miss. You have to continually try to find someone to keep licensing the technology. That also potentially can create competition for yourself as you're looking to move into the future and launch products. So what we've transitioned from is from a platform company to a product company, and we're executing on a clear commercial strategy about launching products in high-value segments like cell culture media and DNA and RNA molecular biology reagents. And we can monetize these models in a variety of ways, whether that's through direct product sales, whether it's licensing, or whether it's partnerships. And the markets we're going after are extremely attractive because people are moving towards non-animal based proteins. And now we've got the first commercial traction achieved. So it's no longer theoretical. We're actually using our technology to use products that are getting used in the markets today. So at early commercial traction proof points, we have Proliant Health and Biologics. They're one of the largest providers of albumin in the world. They have a global distribution network. They probably supply about 2/3 of the world's albumin. And we have partnered with them, and they are launching AlbuFree DX, which is a recombinant human albumin that is made in our C1 gene expression platform. That launch happened in March. We launched DNase I, which is the first company-owned product, and we're focusing on the bulk supply market. Our partner Enzymes has launched chymosin. That is a food enzyme. They also received their self-affirmed GRAS application. So now they're on the market selling into the food nutrition segment. And then we've partnered with Fermbox, not just with DNase I, but multiple proteins and enzymes in the cell culture media, as well as the food nutrition space, to further expand our portfolio. And now we're linking in with distribution partners like Integrated Biotherapeutics, where we're able to get our products out to more people faster. So there's only so much that I can do, or that our CEO, Mark Emelfarb, can do. We're able to launch multiple products because we're using distribution. They have their own sales teams. We supply them product, and then their steel teams go out and move that into the research segment. So again, it's about using our platforms for sustained growth. So we talked about, where we came from, but really where we're at is that inflection point. The products are launching. We're actually shipping product into the market. We're actually getting POs for purchase orders for different products. We've started to sell growth factors into the market. We actually just got our first purchase orders for transfer in the cultivated meat applications. We are going to see, profit revenues coming from our relationship with Proliant. As I mentioned, we have our distribution agreement. So really where we're going is to expand the portfolio of high-value proteins and enzymes across these markets to make diversified revenue streams with multiple monetization models. So now it's about accelerating that growth. The transition has been made. The business is stronger than it was a year ago. We have commercial traction, and now it's about improving the scale. So just so it's clear too on what we do, and again, even though we're targeting multiple different end markets, whether it's in the life sciences space or food and nutrition or bioindustrial, what we do remains essentially the same. We engineer our strains to develop and commercialize products. And we have two complementary platforms to do that. We have our C1 platform, which was the previous industrial platform that's been optimized for high value proteins. So this platform is more for complex proteins to support life sciences, biopharma and therapeutics. So these are products that will be used in cell and gene therapies or products used to make monoclonal antibodies or vaccine antigens. This platform is precision designed for those complex proteins. But anytime you design a platform to produce something more complex, you take a little bit of a hit on the capability for it to produce more protein. So we've developed our Dapibus platform, which allows us to enter these more cost efficient markets like food and nutrition or bioindustrial, where you need high yields, but you also need low cost. Now, obviously, that's a market we're very familiar with from our experience, with Dapibus in the past. We launched as a bioindustrial enzyme company, and we're very successful. We're replicating that model, bringing cost-efficient products to more high-value segments like food and nutrition and the bioindustrial markets, where we feel that our platforms have a competitive advantage. So we have two different platforms to address our three different market segments, and that's leading to broader commercial impact. So what's driving the trends, and why am I so optimistic about where we're going? Well, as you look at what's driving the move towards non-animal, there's quite a few things. There's a regulatory component. So in cell and gene therapy growth, they need proteins and enzymes to basically biomanufacture cell and gene therapy products. So cell culture media, things like transferrin, things like albumin or growth factors. These are critical components of the cell and gene therapy supply chain. They also need to be made at exacting requirements. They need to be high quality, and regulatorily, they're pushing for more non-animal or non-plant-based proteins and enzymes, because not just from a supply chain issue, but from the fact that any proteins that are produced using animal or plant-based sources have the potential for different contaminants or different viruses or different issues to prop up in the production of those proteins. When you're producing them recombinantly, and especially when you're producing them with a system like our C1 or Dapibus platform, we don't have viruses or endotoxins in our downstream processing. So we basically remove some of the risk that comes along with producing things from animal or plant-based sources. There's also significant pressure on the supply chain from a cost perspective, right? And that's not just in the life sciences space, but that's across food and nutrition and bioindustrial. There's a demand for cost-effective alternatives to animal and plant-derived sources. And that's, again, where our technology plays a significant role. And then there's the component of sustainability and being animal-free. That's a trend not just from a regulator standpoint, but also customers and brands are prioritizing sustainability and ethical production and non-animal sourcing. And as you can see, a lot of consumers are pushing for more sustainable products. And now we're looking at the rapid expansion of precision fermentation. So there's scaling of precision fermentation capabilities that's unlocking capability for new proteins and enzymes. So that market, the precision fermentation market, is continuing to grow extremely quickly as we move forward. And we're well positioned. We have platforms that were specifically designed to do exactly what the market's looking for, provide high quality, animal free proteins and enzymes that are also contaminant free for these markets. It's scalable. We've proven that in the bioindustrial space. And now we have partnerships as well as our own products that allow us to have a diversified portfolio across these high growth markets: life sciences, food nutrition, and bioindustrial. Life sciences and food nutrition are both growing at extremely high rates. And that's where we have, a differentiated product and a differentiated platform in terms of cost and our ability to make it. So really what it is making sure that our model is simple, repeatable, and scalable. We know that our platforms can scale. So now it's about taking our direct product sales, whether we sell them on our own or through distribution agreements. We can license our platforms or our technology, and obviously we have fees and milestones associated with that. And obviously you can see the examples that we have. And then we have partnerships, profit sharing arrangements, where we're able to co-develop and commercialize different products through our partnership with Fermbox or our partnership with Brig Bio, and they're looking at enzymes for the food and nutrition space, and cultivated meat partners that are already starting to order in bulk for some of our cell culture media agents. So as you look at it, again, we have basically diversified our revenue streams, but they're recurring. These are products that once they're in the market, once they're getting used, they will continue to drive sales for us and drive revenues for us well into the future. And that's both on the partner side as well as, on the direct product side. And then we have the licensing component that adds inflection points along the way. So as we have opportunities to take advantage of segments, whether it be cell culture media or maybe non-animal dairy, these are areas where we can see, greater growth or, larger growth points or larger growth opportunities from a licensing or a platform or portfolio-based strategy. So we're obviously focused on much larger, we're focused on specific areas within much larger global markets. So when you look at life sciences, the initial addressable market we're targeting is about 10 billion, and that's cell culture media and DNA and RNA molecular biology reagents. But the market itself is well over, 17 to almost probably 20 billion, and it's going to continue to grow. So we're addressing markets where we have a specific advantage today, but the opportunity to expand in the global cell culture media market and into the global market for DNA and RNA products is going to continue to grow. Similar in food and nutrition. When you look at the non-animal dairy space, and we're just looking at the products that we're currently producing today, so like alpha-lactalbumin, chymosin, and a few others, that's about an $11 billion addressable market opportunity. But when you look at the global alternative dairy market itself, it'll be 100 billion by 2030. It's going to continue to expand. In the bioindustrial segment, and again, it's exactly the same way. We're targeting where we have specific advantages, which is in the cellulosic enzyme space for bioprocessing and biofuels and biorefining. But we see the opportunity for expansion into cosmetic enzymes or specialty enzymes. And these sub-markets are going to allow us to continue to grow as we continue to bring products into the market that we can start to go after the larger markets themselves. And the proof points are there. We have real products, we have real partners, and we have real traction. So we have Proliant Health and Biologics. That's probably the prime example where we've commercialized our technology. We've used our technology and we've licensed it to Proliant Health and Biologics to launch AlbuFree DX, and they're going to launch other products in the future as well, other albumin-based products. We have a profit sharing model, and again, it's a high value market entry. Cell and gene therapy, cell culture media itself, those products are used to grow CHO cells to grow monoclonal antibodies. They're the right strategic partner because they're a leader in the albumin space. They have a global distribution network, and we're very confident they're going to continue to grow that market and grow the franchise of AlbuFree DX. And then we're doing it ourselves by enabling global distribution through working like partners with IBT. We just shipped our first batches of product to IBT that will soon be on the market and being sold into the channels for research and development. We look to expand to further enhance those lines and take them up into more clinical grade production. So we will start to enter the cell and gene market as well. And then we have Fermbox. They're helping us launch and manufacturing DNase I and other cell culture media enzymes so that we can actually start to, we are actually starting to drive our own direct sales. We have early revenues coming from growth factors. We have early revenues coming from transferrin earlier than we thought they were going to in the cultured meat space. So now we have people actually purchasing transferrin and cultured meat. So it's validated the strategy is working. We've got 6 products that are currently in commercialization. We have 3 strategic partnerships, and we're looking for revenue growth and building momentum as we move forward. Life sciences, just to drill down just a little bit, our portfolio is going to continue to grow. Right now, it's anchored on albumin, transferrin, growth factors, and then DNase I is our flagship product for the molecular biology reagent space. But these are recurring consumable products. They're involved in the manufacturing process of many different other products, whether it's the biopharmaceutical space like cell and gene therapy, or whether it's in the food and nutrition space, like cultured meat. DNase I, again, it's one of the building blocks for cell and gene therapy. It's also used in mRNA vaccine production, but essentially it's the anytime you need to remove or manipulate DNA, DNase I is the first agent used to do that. So again, we're focusing on the right markets where we have an advantage. We're partnering in the right spaces so that we can get the products to our customers. But these are recurring revenues because as they get implemented into the workflows, they will continue to be purchased on a repeating basis. And once people get comfortable with them, they want a reliable, consistent supply, so they're not as likely to switch, provided they have the, obviously good pricing and good products. Food and nutrition market is very similar. This has an extremely large upside. And with the consumer focus on health and nutrition right now, we have a great partnership with BridgeBio to bring alpha-lactalbumin to the market. And the applications for that are multiple. Obviously, you have medical nutrition, functional food, sports nutrition, ultimately over time, potentially infant nutrition, which again, getting into the infant formula space is an extremely large and growing market we'd like to get into. We're developing lactoferrin. We have transferrin and growth factors that we use for the cell or the cultivated meat space. And again, this is more of a partner-driven model because there are a lot of development that needs to happen with these cell lines to get them to the yields that we need to be competitive with animal and plant-derived sources. The partnership model works better in this scenario so that our partners are enabling the development, and then we're able to monetize that through milestone payments, royalty revenues, as well as co-marketing and co-manufacturer agreements. This is a large and growing market, and it's being driven by not just a regulatory push for more clean proteins, but also a strong consumer demand for sustainable, animal-free, high-quality ingredients. And then finally, we have the bioindustrial segment. And again, this is kind of getting back to our roots. I mentioned that on our last earnings call. This is where we're kind of getting back to our roots. It's a space we know extremely well. We know that our platforms can perform well in these spaces, and our Dapibus platform has already enabled us to launch N3Zyme, which is our co-marketed product with Fermbox. They're manufacturing that. They have the first initial purchase orders that they fulfilled. So we expect to see revenues coming from that agreement starting in 2026. And it's enabled us to really accelerate the development of Dapibus and utilize it more broadly across not just the bioindustrial space. We're looking at things in the cosmetics, but also in the food and nutrition space. So it's validated the platform for large scale commercial use, which also is important as the precision fermentation industry as a whole continues to grow. We have a platform that's been demonstrated to scale very easily and effectively on a global basis. This is just what the timeline and the products look like. As I mentioned before, we have life sciences, food, nutrition, and bioindustrial. But as you look, We had early commercialization of growth factors last year. We had our first purchase orders for growth factors. We've launched DNase I. Our partner, Proliant, has launched albumin, and we're launching transferrin. We have some initial sales in the cultured meat space. And then when you have the DNA and RNA enzymes, those are continuing to be in development. We're going to look to launch some of those late this year, early next year. And then human alpha-lactalbumin. That is kind of the sister protein to bovine alpha-lactalbumin, which Brig is developing. We're developing it as a research grade use for cell and gene therapy applications. It's a supplement for cell culture media. So we have some early adoption there. We actually have some customers that are interested in purchasing alpha-lactalbumin in the life sciences space. And then we move to food and nutrition. We have the chymosin that's already launched into the market. We're going to be launching initially some lactoferrin into the food and nutrition space as well. We expect to begin sampling in the late second quarter, early third quarter. And then bovine alpha-lactalbumin with Brig, we're already seeing early commercialization. We have partners that are looking to purchase initial quantities for product development. And then we're also developing a suite of functional food proteins that we can bring into this space. Bioindustrial as well. We have Enthryzyme that's on the market. It's starting to grow. And then we're looking at other biorefining enzymes, and I mentioned cosmetic enzymes and other industrial enzymes. But what this is showing is we're launching products. We have a strategy to expand portfolios and expand the markets in all three of our segments, and we're going to continue to expand the commercial reach as we move forward. Sorry. And I'll just the last thing I want to talk about is it's not that we're going to walk away from biopharmaceutical partnerships and biopharmaceutical opportunities, but these are all going to be non-dilutive partnerships that will continue to validate our platforms and preserve that long-term upside potential. We're currently working with the Gates Foundation, CEPI, and the Foundation Biotecnopolo de Siena to advance the platform in multiple different ways. With Gates Foundation, we're working on monoclonal antibodies. In CEPI, we are working to speed the capability of the platform to produce vaccines in under 100 days. And we're also part of the European Vaccine Hub, which is looking to address pandemic preparedness for the EU and beyond. So these are all non-dilutive funding. And again, they're led by third-party collaborations or strategic collaborations. So they give us the ability to continue to advance the long-term potential for the use of C1 in biotherapeutics, but they don't take our focus off of what we're doing today, which is launching products and driving early commercial revenues. So really leave you with, we have multiple products across multiple markets. The opportunities are expanding, and we're going to continue to deliver strong performance as we move forward while maintaining that biopharmaceutical optionality for, potential for some long-term value. But in the short term, it's all about launching products into the market, ensuring distribution, and really expanding our opportunities to create recurring revenues. So our path forward is very clear. We are very focused on commercial execution with the goal of sustainable growth through our diversified revenue streams, ultimately delivering long-term value for shareholders. And just leave you with, we do have an experienced, leadership team with myself as well as, Mark Emelfar, our founder and CEO. And we have just a nice team with a lot of deep experience, and not just the biopharmaceutical realm, but also the bioindustrial and commercial execution in food and nutrition. So we have the right team in place to execute on this strategy. And I'll stop there for questions.
Great. Well, Joe, thank you so much for sharing that context with us. We have a couple of questions from the audience. So maybe to start, I know you announced some exciting purchase orders at the last earnings release. Could you give us a sense of, how commercial scales up from here? And, specifically, someone asked when you might report sales in excess of 10 million, when you're aiming for that.
Yeah, and again, I don't have a crystal ball, but the way the sales process works for these types of proteins and enzymes is first you have basically your pilot scale application. So the current purchase orders are relatively small first orders. And then as they're used and as they're validated, then you get the larger orders. And a good example is N3Zyme last year. We had an initial purchase order of, several metric tons. And then the follow-on order, once those were, used in application and found to be successful, the next order was, a couple thousand metric tons. So again, that's an industrial, example, but like in the cultured meat space, you're looking at, in the first orders, you're looking in the tens to hundreds of grams. And then as they get to commercialized volumes, then you're looking, in the kilograms to potentially metric tons. Food and nutrition, very similar. They scale, their pilot scale is a little larger. Sometimes it's kilograms or small metric tons of material, then ultimately be hundreds of metric tons as they get up to scale. So the initial revenues will be, pilot based, and they'll be a little bit smaller, but they scale rapidly as they start to enter the commercial channels. So and then the research grade segments, those are, relatively smaller volumes, but they're much higher margins. So in the, like our partnership with IBT, that's all research grade material. So again, the purchase orders themselves aren't particularly, large, but the monetary value of them could be larger because again, you're dealing with more high quality proteins and enzymes that have more, qualifications associated with them. So we expect to see, obviously the revenues start to increase, but then quickly accelerate as these products start to hit the larger commercial markets and they start to get the repeat and recurring purchase orders coming in. So the first initial ones are to pilot, test it, and then as you move forward, then it starts to grow rather rapidly.
Noted. And then in terms of, capacity to meet that growing, demand and then sales, do you have that already? And can you talk about, basically how you're going to expand the supply side as well?
Yeah, absolutely. So we have multiple CDMO partners depending on the markets that we're targeting. So like our partnership with Farmbox, they are our manufacturing partner for our own direct sales products, as well as some of our third-party partnerships. We also have partnerships with other CDMOs in the EU as well as here in the US, and we're looking to expand that footprint. Precision fermentation capability is continuing to expand. So we are seeing more precision fermentation companies entering the market. And again, they're focused on microbial production, which is right in our wheelhouse. The nice thing about, our technology is it doesn't require any specific equipment or any unique equipment that they wouldn't be purchasing for, running other, proteins and enzymes and other systems. So we have a very scalable and tech transfer friendly product to basically anywhere on the planet that's using microbial expression technology. So right now, for where we're at, we have enough capacity, and enough capability to fulfill our obligations. As we move forward, we will look to expand that through partnerships with other CDMOs as we move forward.
Great context. And maybe as we come up on time, last question from the audience. Can you talk a little bit about, capitalization? Do you have what you need, to go through most of the scale up you just discussed, or, do you plan on raising some capital?
I think, as always, we need to be opportunistic. When there's an opportunity, obviously, I think we need to try to capitalize on it. As I spent my entire career, prior to, Dyadic in, biopharmaceutical commercialization and development. And we're doing it a little bit, I don't want to say backward, but we're doing it the more, I would say, cost-effective way, which is we're building and scaling to demand. When you launch products, in other spaces, you take on a lot of debt, you manufacture a ton of inventory, and then you try to push it out into the market. That obviously, we don't have the resources to do that. And honestly, in these spaces, you don't need to because the initial volumes aren't so large that you want to manufacture and hold on to a ton of inventory. So, and the process for production is actually relatively rapid. So we don't, our goal is not to sit on a lot of inventory. Obviously, would it be nice to have, more capital to improve our inventory outlook? Of course it would. But at the same point in time, we need to be judicious and grow as the demand dictates. And that's what we're trying to do right now. But again, we're always looking for opportunities to accelerate that growth. And should there be an opportunity that comes along that requires, some sort of financing, we'll explore that, again, based on what's in the best interest of the company and the shareholders.
Got it. Well, Joe, thank you very much. With that, we're at time. So I'd like to thank you for sharing the Dyadic story with us, and also thank everybody listening for spending time with us today.
Thank you. And thanks everyone for listening. Appreciate it.